This is a special edition of Capital Ideas TV. Coming up, our best of 2017, featuring detailed looks at the cannabis and blockchain sectors, plus an array of CEOs from Village Farms, HIVE Blockchain, Nemaska Lithium, and more. Hello and welcome to this special edition of Capital Ideas TV. I'm Mark Bunting. It's been an incredibly eventful year in global stock markets, with the North American benchmark Dow, S&P 500, NASDAQ, and TSX all hitting record highs. And 2017 was plenty busy for small cap investors too. Some of the year's hottest returns came courtesy of emerging sectors dominated by earlier stage companies, niche businesses, and new technologies. Now, Capital Ideas keyed in on many of these top trends throughout the year. Let's review some of these greatest thematic hits. There's the old Latin proverb, fortune favors the bold. Well, investors who applied that line of thinking to cannabis stocks almost certainly did quite well for themselves in 2017. The regulatory environment was, and in many cases still is, anything but certain. But as attitudes toward cannabis have started to change in the mainstream, bets on those first movers in the nascent industry began to pay off in a big way. Take a look at how the world's first cannabis ETF performed in its inaugural year. The Horizons Medical Marijuana ETF notched a cool 40% return since its inception in April. What's more impressive is that all of those gains took place in the fourth quarter. After a few weeks of initial enthusiasm, the ETF was actually underwater from its debut price for the next 6 months, but it exploded higher in November and December, rewarding those investors that stuck to their earlier conviction. The general consensus is quite upbeat about the future of the cannabis sector, especially in the near term. That's because there's a huge shortage of supply anticipated once marijuana is legalized in more places. Producers are already scrambling to keep up with the rush of demand, and that's mostly from medicinal marijuana. Once recreational marijuana gets the go-ahead in Canada and elsewhere, that's when things may get really lucrative. Have a look at this forecast from Accrel Capital. The firm expects recreational cannabis to become legalized across the United States in 2020. That will be the true starting gun for the estimated $25 billion industry. Within a decade, Accrel sees the marijuana business in the U.S. soaring to $100 billion. A key driver will be natural and synthetic cannabinoid-based products, which the firm believes will be worth just as much as the traditional cannabis market by 2029. Those gaudy expectations for the cannabis business and the looming demand crunch are what tipped the scales for Village Farms International. The company is delving into cannabis production after 30 years as a large-scale vegetable grower. It's in the process of converting a 1.1 million square foot greenhouse in British Columbia into a marijuana production facility. It would be by far the largest in Canada. In September, Village Farms CEO Michael DeGilio explained to us just how transformative the move would be for the company's cash flow.
That 1.1 million square feet, to put it in perspective, growing 75,000 kilograms would be about 75 million grams. So if you looked at it, you can do the math. If you calculate it at $4 a gram, just say, before it commoditizes more, that's $300 million in revenue. So taking 10% of our assets would generate $100 million more than we generate today, because today our revenues are just north of $200 million.
But you're thinking even bigger than that. You think you can get up to, what, 300,000 kilograms?
At least 300,000. So in the Pure Sun Farms has an option for the other two adjacent facilities, which would bring those three to a total of 4.8 million square feet, which would generate a minimum of 300 million tons. 300,000 kilograms rather,
right,
or 300 million grams. So now you're really getting north of $1 billion in revenue on that conversion, and that 300 represents about 50% of the current contemplated market in Canada.
For many companies, we tell them that their data is like the Mona Lisa. It's incredibly valuable. Every large organization in the world right now has a 42% compounded annual growth in their data storage, and the old methods aren't going to work. Leonova's technology was built under the following assumption. All your investment in network technology and security technology and hardware, we assume it all fails, and the bad guys are going to get access to your data. With Leonovis, we're the last line of defense.
If there was one word that dominated business headlines in 2017, it was Bitcoin. The breakout cryptocurrency came into its own in a way that nobody could have predicted, not even famed futurist Don Tapscott. Bitcoin was enjoying a very healthy run earlier in the year, and then things got downright weird. In mid-July, Bitcoin started climbing steadily, and it kept going and going and going and going some more at an even faster pace. By November, the cryptocurrency had broken through $10,000, and investors were calling for the bubble to burst, but it didn't. It just kept growing. During the first week of December, Bitcoin added another $7,000 to its value in a matter of days, smashing through $17,000. Bitcoin futures contracts now trade on the CBOE and CME. Nobody knows what's next for Bitcoin, but one thing's certain: the technology underpinning cryptocurrency transactions is here to stay, and that's blockchain. Big things are expected for it, too. Consultancy firm Grandview Research forecasts blockchain will be a $7.7 billion business by 2024. Blockchain's uber-secure and speedy distributed ledger technology has the potential to completely upend the financial services sector and touch many other industries in the process. There are currently only a handful of ways for investors to buy into the blockchain sector, including one offer on the TSX Venture Exchange that's been a rip-roaring success since hitting the market, and that's HIVE Blockchain Technologies. This is a company that mines newly minted cryptocurrencies by completing blocks in the blockchain. This involves using some hefty computational power to solve complex mathematical problems faster than the competition. CEO Harry Pokren joined us shortly after his company's IPO and explained HIVE's value proposition for investors.
Our facilities at the moment are GPU-based miners, so we would tend not to mine Bitcoin, but rather all the alternative currencies. So Ethereum would be the main one. Ethereum, there's Zcash, there's quite a number of them, and we can switch currencies depending upon the margins on the individual ones, or whether we're taking a view on a particular currency and we want to add that currency for some future event or something like that.
Now, this is an investment show, as you know, Harry. Our viewers love to know the numbers, but I understand that with your company, it's such early days that it's difficult to get a handle on revenue and earnings projections. Why is that?
Again, the margins are as volatile as the currency is, so that's one problem. It also, we will be hoarding coins, so we will have a growing inventory of cryptocurrencies. And while we've just started mining beginning of September, that inventory isn't meaningful at the moment, but it'll grow over time. So as time goes on, that part of our business becomes more and more relevant.
HIVE Blockchain Technologies went public in September and never looked back. The stock rocketed nearly 460% during its first month and a half on the market, before shedding about a third of its value. Still, that's an eye-popping 237% increase in just 3 months. And with so few alternatives currently available to the public, HIVE may well enjoy continued support from investors. Blockchain technology is still in its relative infancy. That means no two blockchain companies are really completely alike in their business models. GMP Capital is one of the investment brokerages throwing itself behind the blockchain revolution. It's formed a dedicated blockchain team focused on courting new companies looking to raise funding and eventually go public. CEO Harris Fricker sat down with Capital Ideas in November and explained how the smart money is investing in blockchain.
So I think the ecosystem is going to play out in a way that it's completely unintelligible how it's going to look even 24 months from now. And many of the smart capitalists in the space are taking almost a venture capital approach where they're saying, I need to own a basket of opportunities in a whole variety of blockchain silos. You mentioned HIVE in the mining space. That's an Ethereum and other non-Bitcoin cryptocurrency miner. That's basically, because it's a miner, it has no know your client issues or any money laundering issues, and they're amassing and holding their cryptocurrency So that's a really interesting play that the market's responded very strongly to. There are others who are creating funds that are going to invest in the ecosystem. And then there are players doing specific applications on the, let's say on Ethereum, and those applications are going to be used to build out blockchain functionality. So it's a vibrant, broad space, and really you need to be looking at everything.
One word of caution when it comes to blockchain: know where your money is going. There's plenty of hype surrounding the space right now, and that makes it ripe for scammers. Capital Ideas contributor Fabrice Taylor explains what investors need to do to avoid getting sucked in.
In the early days, there will be the Lotus Notes. Okay, these are blockchain companies that will have real software, real coding abilities, and a real business plan. And what you want to look for there is people who have an application. They can tell you, we're doing blockchain for this specific purpose, and here's how we're going to sell it, and here's our potential clients, and here's the problem we solve. If you can't answer that, you don't want to be anywhere near it.
So we have a tagline, and that's like the Desert Line Energy is the next producing lithium mine in the world. Not only at Desert Line Energy, we're ready to meet the demand of the lithium market today by coming into production now. We're also looking out into the future, and we see a bright opportunity for us to be a long-term producer producing lithium chemicals for the growing lithium market today and then into the future.
For years, the mining sector in general was maligned by investors. A commodity supercycle sparked a production rush from miners around the world, and that flooded the market with supply. In turn, prices for many metals plunged. But now things have turned around, and in a big way for some of the metals. Case in point is lithium and lithium stocks. Get a load of its explosive run in 2017. Here's a look at the Global X Lithium ETF, which broadly tracks the performance of the sector. It touched an all-time low in February of 2016, but then came roaring back to life. The reason? Electric vehicles. They're expected to be the transportation choice of the future, and they require lithium-ion batteries. Analysts at Deutsche Bank predict demand for lithium-ion batteries will more than double by 2025. That's as China and Europe set out ambitious targets to phase out traditional vehicles for a cleaner alternative. As a result, automakers are looking to lock down lithium supply while they can. That's not a bad idea if a forecast from Benchmark Mineral Intelligence holds true. The firm expects the price of lithium carbonate to average about $13,000 per kilogram between 2017 and 2020. Meanwhile, lithium hydroxide will cost north of $21,000 per kilogram. Those averages are roughly 3 times what they were between 2005 and 2008. Nemaska Lithium understands the value of that resource demand, and not just at the mining stage. The company is in the process of constructing a lithium mine near the port and rail hub of Shawinigan in Quebec. In addition, it's looking to process that raw lithium into finished products. The idea is to reap the rewards of the battery boom that's driving lithium prices sky high. Nemaska CEO Guy Bourassa joined us in November to discuss the key asset behind his company's plan to vertically integrate.
We have been able to buy a recently closed paper mill facility with existing very large building. So yes, we can expand in the actual Shawinigan plant. As you certainly know, we already have 50% of our capacity already sold forward from 3.5 years to 5 years with 2 existing number 1 class clients. And so 50% are already being sold. All of the feedback we receive currently from other end users, we need more than the 30,000 ton LCE capacity that we designed initially in the feasibility study. So definitively we're looking at the capacity, the possibility to expand, and but that's going to come in a second phase.
And do you think down the road, Guy, in a few years' time, that a company, say, out of Australia may send their product to you to process? Could you be sort of a hub for other companies?
Oh, absolutely and certainly, and we've been approached already by third parties. One of the hidden value of the Nemaska proposal that does not reflect in a feasibility study is the strategic location of Shawinigan. accessible by the St. Lawrence River, accessible by rail from anywhere in North America. So let's say a small project of spodumene that cannot justify the construction and financing of a chemical plant. Today, as only China as a source of selling is where to sell its concentrate. Now that we announced that we're going to be building our conversion capacity in Shawinigan, we receive call from smaller projects saying, Guy, would you be interested to buy our material? So yes, we're interested to buy material. Yes, that plant can easily compete with all of the Chinese conversion plant, and we could receive material even from Australia.
Nemaska Lithium shares have rallied more than 20% since our conversation with Bourassa. The miner has also reached a key milestone since then. In early December, Nemaska delivered its first batch of battery-grade lithium hydroxide made from the raw material it pulled from the ground. The company says it will be regularly delivering more product to its customers in the weeks to come. There are a couple of key hurdles to bringing new lithium projects online. For one, they don't come cheaply, and number two, they can take a long time to build. Those two factors alone would be enough to sink less prepared junior miners, but not Neolithium. Even though the miner will need nearly $500 million to build out its mine in Argentina, it's confident it has the edge on the competition. Chairman Konstantin Karyanopoulos sat down with us in November and shared the secret.
When you look at the investors in our base, these are global funds with an awful lot of financial firepower who, when they invested in our company, and some of these folks have owned 5 to 10% of Neolithium, they've all made the commitment that we want to be shareholders at the beginning and we will be there when you need the really big bucks to build the plant. So we're fairly optimistic that as we execute our project, these very large global names, and when I say global, a lot of them are in Toronto, and Toronto is a huge global market for resource investments. A lot of these funds in Toronto are backing us up as well. So we're fairly bullish on our ability to raise the financing that we will need to implement this project.
We first featured Neolithium in the Digest in March. The stock trailed off after that to a 2-year low, but then powered by positive demand news in the sector, the stock took off and more than doubled to record highs. Being early to hot trends and sectors is a key part of building a winning portfolio. At Capital Ideas, we enjoy presenting you with stock ideas that go on to have big breakouts. 2017 was a successful year for our team. Here's a rundown of some of the companies that appeared on Capital Ideas TV whose stocks went on to big gains. Our biggest winner is Village Farms International with a more than 240% surge. Neolithium and Afria round out the top three with triple-digit returns. On the other side of the ledger, Acuity Ads nearly doubled after our cover story in January, but the programmatic advertiser had some negative news about some of the third parties that it worked with, and the stock tumbled. But analysts still like this growth story and have an average target price on Acuity Ads of more than $4. It currently sits under $2. Let's take a look at some of those outperformers, and we'll tell you why we think they'll continue to outperform. We begin with Legend Power Systems, a company that helps clients get the most bang for their electricity buck. In a nutshell, Legend Power is a smart transformer. Its harmonizer can dynamically regulate the amount of electricity coming into a building and send excess amounts back to the grid. This results in sizable cost savings and a lesser environmental footprint. Investors have rewarded that green thinking with some of their own green. Legend Power CEO Randy Buckermer joined Capital Ideas TV in our inaugural episode in June. The stock started to pick up after that, roughly doubling over the next 6 months. Shares hit a 7-year high of 80 cents twice in that time and are holding around that level. A crucial decision by the Ontario Ministry of Education really turned Legend Power's fortunes around. It included the company's harmonizer in a group of technologies that qualified for $1 billion in funding for facilities improvements. Pretty soon, contracts from Ontario school boards started rolling in, and word got around how effective the product was. Now Legend Power is expanding into the northeastern United States, and that's one reason why Buckamer says now is just the start of things to come.
Yeah, I think we're out of that startup stage, but we're still on a capitalization that probably reflects that. I think as we get more demonstrable results quarter over quarter, people will reflect that the business actually is substantially ahead of where it is reporting. By that I mean we've got a lot of inroads on the sales side, we've got a lot of flow of deals, a lot of activities, we're adding the right people. So I think it's a great inflection point for people to get involved in a company that I believe has got a proven base to build off and build into the USA. And the third part of that would be also that we leverage people that we're already dealing with. So in our component of sale, we have a product and we also have people that do the installation. So the people in the States, et cetera, can do the installation for us. It's about a third of our over capital sale, but they can do it without any additional cost to their equipment, people, et cetera. So we're creating a new profit stream for them. So it's an exciting time for us to bring that product to the USA. Yeah, we've got the right people and products, and we think it's a great time to be a shareholder.
Legend Power may find a receptive customer base in the northeastern U.S. Take a look at this chart from the Bureau of Labor Statistics. The New York City area paid roughly 40% more for its electricity over the past 5 years than the national average. That's a hefty premium no matter how you slice it. What's more, New York State offers energy incentives that are even higher than Ontario. Therefore, one would think there's plenty of good reason for businesses to cut back on consumption if they can. That's generally the case for the entire northeastern United States. This map from the U.S. Chamber of Commerce's Global Energy Institute breaks down the average electricity cost for each state. The highest prices are concentrated in the Northeast, with New York, Massachusetts, Connecticut, and New Jersey among the hardest hit. Legend Power is growing its sales teams in the northeastern U.S. in hopes of kicking off its American expansion strategy with a bang. Another stock that really took off in 2017, both literally and figuratively, was Drone Delivery Canada. The company is developing autonomous drones to deliver goods in a faster, cheaper, and more environmentally friendly way. It's out in front of the competition in Canada, having worked with transportation regulators to develop new rules for the technology's commercial use. Drone delivery plans to officially be open for business in 2018, and investors have been sending the shares higher in anticipation of that. Drone delivery shares really started to gain altitude in September as the regulatory picture in Canada started to become clearer. The company also notched several contracts with customers across a variety of sectors. But most importantly, the firm reached a deal to experiment with deliveries in a remote northern community, putting its service to the test in more ways than one. That project saw the drones tackle some of Canada's harshest weather, including high winds, snow, and frigid temperatures. They persevered, though, through these conditions, completing several successful test flights and deliveries of food, medical supplies, and mail. Drone Delivery Canada is continuing its testing in those remote communities and is hoping that regulatory clearance is not far off. CEO Tony DiBenedetto says the profit margins will be healthy once the company is permitted to fly commercially.
This business, because it's heavily focused on automation and systems, it's very EBITDA rich. And once you get to maximum utilization, money just starts falling to the profit line. So we're looking at about 60% EBITDA margins upon commercialization, and looking to break even very, very quickly.
Okay. And then as far as your cash position, you're nicely cashed up to ramp up?
Absolutely.
Yeah.
We had a phenomenal raise earlier this year. GMP led the raise for us. It was predominantly institutional. They came on board. Today we're sitting just shy of about $10 million in the bank, and we're very well funded to move to commercialization.
The Canadian market may not be very large in the grand scheme of things, but the experience drone delivery is building with regulators is invaluable. Here's a look at how massive the commercial drone market is expected to be in a few years' time. Technology research firm Tractica predicts commercial drones will be a nearly $13 billion opportunity by 2025. More than 2/3 of that total will come from commercial drone services like Drone Delivery Canada is looking to offer. North America is expected to be the largest market for these services, And there's a chance the American rules will be fairly similar to Canadian ones, meaning drone delivery will have a head start when applying for clearance in that market. One of the breakout stocks in the biotech sector in 2017 was Helius Medical Technologies. The company wants to change the way we approach rehabilitation from traumatic brain injuries, and it made some big strides last year. The company believes the secret lies in the connection between the brain and the tongue. Helius Medical CEO Philippe Deschamps explains how the company's portable neuromodulation stimulator, or PONS for short, works to heal patients.
It comes in two pieces. The first is what we call the pulse generator. And remember, I said it was always a combination of physical therapy and stimulation. So we designed it to fit right around your head like this, which means that you can do any kind of exercise, walk around or anything like that. And then the tongue array, which is a quite sophisticated piece of electronics, delivers the electrical stimulation to your tongue. And you put it on the front third of your tongue. Your tongue is innervated by more nerve endings than even the tips of your fingers. And then those electrical impulses are actually translated to what the body and the brain recognizes as motor neural impulses, the same that come up your spine and into your brain. And it seems to be the combination of those 27 million impulses coming from the PONS, combined with those that are localized in your brain by working on what you have a deficit from. So if I have a balance disorder, for example, I would do balance exercises while I'm doing this. So the brain gets flooded with information, combined with the localization of what part of the brain you're working on by doing your balance exercises, and the two things combined seem to help the brain find a way to reorganize itself to accomplish what's been damaged by disease or trauma.
Helius Medical conducted clinical trials testing its product on a group of patients with chronic balance issues who were undergoing physical therapy. One half of the group received low-frequency electrical pulses to their tongues, and the other, full-frequency pulses. The results were mostly positive, although a certain endpoint was not met. Helius Medical shares had doubled leading up to the results, and the stock got hit as a result before stabilizing. Despite that, Helius has quadrupled since we first talked about the company in 2016. Here's Fabrice Taylor's take on the market's reaction to Helius Medical's clinical trial results.
The company's argument is, no, this is good. It shows that our device actually works at a lower frequency, just not as well as at a higher frequency. That's their argument. And they're convinced that they're going to get FDA approval. Even the analyst who walked away said they'll probably get FDA approval because it's safe. What he said is that they'll never be able to commercialize it because no doctor will prescribe a remedy that doesn't meet its endpoint in a trial. The company says that's nonsense. We will get referrals, we will get prescriptions, we will get reimbursement. So we'll have to see. There's more data to come out, and the stock has rebounded. The market is telling you that there's something here.
Helius intends to focus on the chronic imbalance market first and build up some cash. The company will then run additional studies in the hopes of proving that its technology can be effective in addressing symptoms related to other neurological diseases. CEO Philippe Deschamps says that's when the company's earnings potential really explodes.
Lifestyle brand. I was fundamentally confused why there wasn't an apparel product that fostered a lifestyle of play for children. We want to foster a playful life.
From the heart of the financial district in downtown Toronto, that's it for our special edition of Capital Ideas TV. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great investment ideas and great research, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We look forward to bringing you more excellent investment ideas in 2018. We'll see you next time.